Hi, Karen Deis here, and it seems like we're getting back to the 2008 level, where we're getting an average of 15 to 20 rule updates on a monthly basis. This month you're going to find 19 of them. Some are more important than others, so here's a short video synopsis of what you might find with my commentary. So let's start out with USDA. There were 6 new updates, but there are 2 of them that you may want to dig into right away. So, first of all, remember the pilot refinance program that they introduced about 6 months ago? Well, they've included 16 more states, making it a total of 36 states, which is about 72% of the country is now involved in the pilot refi program for USDA. Basically what it means, no credit report, no appraisal, and it's really the streamlined version of the FHA refinances. Secondly, this one is the biggie. USDA has updated their closing and underwriting doc matrix to include some of the following. New job start dates, how to handle different types of student loans, mileage reimbursement income, documentation requirement for different credit score levels, cash reserves, and second job income. But what we have done for you as a subscriber is to go ahead, we've highlighted the things in yellow that have changed and made some notes so you don't have to go and compare the old chart to the new chart because we've done it for you. We've also updated the chart in the charts and checklists section so you can download that and share with your processors. Now the next big announcement, which we knew was coming all along, were the FHA increase in the annual MIP premium. Now the increase goes into effect on April 1st, with the second date being June 3rd, which relates to how long it will take to cancel mortgage insurance. Basically, if it's less than 10% down, it can never be canceled. If it's 10% down or more, it can be canceled in an 11-year time period, which basically doubles the years that it had been canceled. And for your information, we have updated all of the charts and checklists that have to do with the FHA annual MIP, and also updated the Mortgage Talking Points article called Rules for Dropping Mortgage Insurance. So you can distribute that to your consumers and your real estate agents as well. Now there's a couple updates from Fannie and Freddie that were mandated by the Federal Housing Finance Authority. And quite frankly, it's a hard one for me to believe because it involves lender incentives. You know, we didn't really believe that it was real, but we've done the research, and now lenders have the ability to offer incentives of up to $500 for people to do business with you. So here's the dealio. Fannie says that you can offer incentives on purchases and refinances, and Freddie says that you can only offer it on their relief refi program. But we think Freddie misinterpreted it, and I think there's going to be another update from Freddie that says that you can also offer it on purchases. So here's what I see happening. Mortgage companies are going to start a campaign, do business with me, and I'll give you a $500 gift card to close your loan. Oh, and don't be surprised if you see Quicken Loans offer this on their TV ads, because it is perfectly legal. Another update with Fannie and Freddie is how to handle principal curtailment loans. So this is the really first concise way on what you can do if you're refinancing a loan and you find that you have too much money which exceeds the dollar amount that you could give back to the borrower at closing. They now give you a formula on how to reduce the loan amount. So why would you want to do this as opposed to maybe taking that principal balance and reclosing the loan? What we have found from loan officers that we've been answering questions for is that sometimes when you do that and you run it through DU or LP, the loan is now rejected. Don't know the reason why, but sometimes it's better just to take that money and apply it towards the principal balance. Now you're also going to find 3 articles from the Consumer Finance Protection Bureau. We've covered the qualified mortgage rules, the LO comp rules, and the appraisal protocol rules. Now, I have to tell you, after our experts read 1,800 pages, we've decided not to overwhelm you. Instead, we're going to be writing an article a month with each topic broken down for you so your eyes won't glaze over and you have everything thrown at you at once. Because basically, most of these rules don't go into effect till January of 2014. So we have time to give you little tidbits from every separate article. But in this month, you'll also find a Mortgage Talking Points article in regards to the appraisal protocol section for your real estate agents. And if you do reverse mortgages, you're going to find 3 mortgagee letters from HUD. And by the way, the annual MIP is not going to change for reverse mortgages. Oh, one more thing. I don't know if FHA and USDA are getting ready for summer or what, but they issued 2 articles in regards to how appraisers will handle the value of in-ground swimming pools. So, as far as using these updates to keep your real estate agents and consumers updated, and actually have you as the mortgage guru, you'll find 2 mortgage talking points, 3 charts and checklists, 13 Facebook posts, and 16 tweets. Thank you so much for viewing, and remember that getting a loan approved and closed these days is rocket science.